Today we would like to talk about UK manufacturing data as well as the retail sales data. Yesterday we received updates from both Europe and the UK on the health of their manufacturing sectors, and what we would like to do is do a bit of a compare and contrast of the two regions relative to one another. So if we start in Europe first, what we've seen is that the manufacturing PMI data has come in at 45.8, and as we know, the way that these indices work is they're called the fusion indices. So that means that it's put together in such a way where if a reading is greater than 50, that signals expansion, and if it's lower than 50, that signals contraction. So the fact that European manufacturing has been 45.8 signals that the sector is within contraction, and this is a theme that has continued for the past 2 years or so. So what we're seeing underneath the underlying data, however, is that European manufacturers are struggling to generate new orders. So businesses have started to run down backlogs, but overall activity is starting to decline because those new orders aren't coming through. And to try and keep profit margins higher, we're seeing European firms look to cut their costs, and the primary way that they've been doing this is from reducing staff. So this is the 15th month in a row where we've seen employment levels move lower within European manufacturing. And what's also not helping them is the higher interest rates that we've seen come through from the ECB, but also higher energy prices, which are an input cost for those firms. However, if we contrast that to what we're seeing closer to home here in the UK, it's a much different picture. UK manufacturing PMI came in at 52.5, so once again above that 50 point, signalling that the sector is actually within expansion. We've seen backlogs come down, but firms have actually managed to replace those with new orders, with firms citing that their end clients are wanting to take higher risks. So we've seen new orders move higher. What has that caused? Well, that means that output for UK manufacturing firms hasn't been higher in the past 2.5 years. So firms delivering those outcomes that are needed for their end clients. And what has that caused as well? Well, firms need extra workers, so employment intentions once again have moved higher within the UK. So much different outcomes that we're seeing between Europe and also the UK. We also said we would touch upon UK retail sales. Now, once again, that's another positive story for the UK, where retail sales have expanded from last month. So last month the reading was 0.3, we're now up to 0.8, and that's been primarily driven by the better weather that we've seen over the past month. So firms have reported that they've seen higher sales for things like food, for people having barbecues because of the better weather, but also an increase in purchasing of summer clothing. However, where we have seen a drop-off in spending from consumers is within them big ticket items, so household furniture, etc. Thank you for watching today's video, and we'll catch you in tomorrow's episode.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.